Silicon Valley Bank's collapse has given rise to a lot of bank stocks plummeting, and this has caused more other financial entities to fall in value. In today's video, we will be discussing the Silicon Valley Bank bailout, leaving stocks and crypto to face the unexpected.
Interesting, huh?
After the numerous withdrawals that contributed to the closure of Silicon Valley Bank, a lot of fear has been in the financial space as people rushed to make withdrawals from other banks that were not even in any form connected to Silicon Valley Bank. These withdrawals have also led to the fall in shares of these banks, and this has caused a stir in the entire stock market as well. This is bound to happen. Consider having a shop filled with goods from different people. Then they decide to come for their goods. Your shop will be left empty. On Thursday, 9th March, the Nasdaq decided to put a hold on Silicon Valley Bank's trading after they encountered a bank run of $42 billion. After this decision by the Nasdaq, a lot of crypto companies were drastically affected, with their prices plummeting. We will discuss this in a bit. Just 2 days after the closure of the SVB, the New York State financial regulators decided to take an early decision in order to prevent any risk by closing the Signature Bank down. While depositors and startup founders were worried about their funds, the FDIC, Federal Reserve, and the U.S. Treasury assured them of getting their inspired assets from both banks that had been shut down. Joe Biden's administration also assured the public that taxpayers would not be the ones to bear the burden of having to make up for the losses incurred by these banks, and this should also not be considered a bailout of any nature, as he is only trying to restore calm to the financial sector. Treasury Secretary Yellen says they are doing their best to ensure this doesn't result in other bank failures.
Make sure that the troubles that exist at one bank don't create contagion to others that are sound.
The management of these banks have been automatically fired, and there are no shareholders as they've all been wiped out. Meanwhile, the Wall Street Journal's editorial disagrees with Biden as they wrote that this is a de facto bailout of the banking system, even as regulators and Biden officials have been telling us that the economy is great and there was nothing to worry about. If you haven't subscribed and wouldn't want to miss any updates from us, kindly hit the subscribe button below. The Silicon Valley Bank's closure has caused the value of tokens like Bitcoin, Ether, and other cryptocurrencies, and the entire stock market to depreciate. Last week, before the sudden failure of the bank, the crypto market was in red. It was basically bleeding. But things seem to be going in favor of the crypto market as prices are seen to be rallying up. The world's biggest cryptocurrency, Bitcoin, was trading at about 9% up on Monday morning, which was almost $22,300, with Ether, the world's second largest cryptocurrency by market capitalization, also trading at nearly $1,600 on Monday, up almost 7% from Sunday. On Friday, both Bitcoin and Ether crashed woefully after the sudden collapse of the SVB and Silvergate, the crypto-friendly bank. Bitcoin and Cardano also rallied between 4% and 8% on Monday. Bitcoin may be seeing a rally in price, but the stock market is not looking good. Let's discuss this in a bit. One of the coins allegedly tied to the US dollar, Stablecoin, was also seen to be trading at $0.96 on Monday morning after it fell over the weekend.
So, over the weekend, the USDC stablecoin lost its peg after Circle confirmed that $3.3 billion of the assets backing USDC were stuck with Silicon Valley Bank.
Almost the entire crypto market is trading in the green, with Dogecoin, one of the largest digital assets by market cap, up 11% and trading at $0.73. Currently, the entire crypto market is worth $1.05 trillion. The incidents from the banking sector in the previous week obviously shook the crypto space, but after the calm was resolved on Monday, the crypto market began to see the light of day as their prices are seen to be surging. On Wednesday, the stock market also began to feel the heat after investors' fear of financial crisis rose again. The S&P 500 plunged 1.6% during the early hours of trading, and this made all the gains made the previous day disappear.
S&P is down 1.65 with
8 minutes left. Dow's down 1.3, Nasdaq's down almost 2% with 1 minute left.
The European market also had a fair share of the hits as stocks of some of their banks fell, with the Swiss bank reporting to have had its stocks fall approximately 30%. The Dow Jones Industrial Average was down about 726 points, which represents a 2.3% downtrend. 10 largest banks lost $39 billion in shares on Wednesday alone, with Santander down 7% and Germany's Commerzbank falling more than 12% due to fear of the deteriorating health of the finance sector. In London, the FTSE 100 index also fell 2.6%. The entire situation in Silicon Valley has sent the entire financial market into a state of chaos. Silicon Valley Bank's collapse did not only come as a shock, but it might affect a lot of other banks if care is not taken. You might want to watch our previous video on Silicon Valley Bank collapse and whether 12 more banks will be crashing soon. Thank you for watching.